What the f is a high yield savings account? Well, I'm so glad you asked. Welcome to Creative Money, the show that helps you make money in creative ways. I'm your host, Denver McQuaid, and today we're gonna be talking about high yield savings accounts. And before you click away, hold on. I know, I typed it out in the title and I was like, is this even interesting? Are people gonna care? And then I remembered, you like to make money. I like to make money. I like to help you make money. These make money. So why don't you give me just a few minutes of your time? I'll lay it out for you real simple, and this will be the best time you've spent on YouTube, at least in the last 3.5 hours. I can guarantee that much. So if you're willing to give me that, let's go make some money. Firstly, this video is not sponsored. Anything I mention is entirely my own personal thoughts, opinions that I want to share with you guys. That said, I have consulted with several financial experts, including my own accountant, and include some source links to what I'll be talking about in this video in the description below. So now that that's out of the way, let's move on. Firstly, I want to talk about how important saving your money is. I know it's not fun. I know it's not sexy. I know it's not this gorgeous trip. It's not this new designer bag. I get it. But if you want that shit in your future too, you're going to need to save some money and let that money do some work for you. All right. Your time is limited on this earth. One, it shouldn't be spent working the entire time. And two, you're only as valuable of the time you can give out. So why not have some other things making money for you so you can focus on what you want to do, all right? We're gonna help you with that today, talking about high yield savings accounts. Now, what does that mean? Your traditional savings account, like the one I actually have at Chase Bank, gets 0.01% interest per year. It literally got 5 cents last month in interest. It's so minuscule, it's meaningless. This is what 0.01% of $10,000 is after a year. Yeah, not really worth keeping your money there, right? Now, that's not to say saving isn't important, but it's about where you save your money that is. With a high yield savings account, typically these savings accounts have a higher interest payment or their yield per year. Now this is often called an APY or annual percentage yield. The bigger that percentage is, the more money you will make over the course of a year, and it gets paid out typically every month at like the end of the month or like a day or two after. If you didn't know this, when you put your money in a savings account, it doesn't stay there. You can log onto your app and go, look how much money I have, but it doesn't actually stay there. The bank or the credit union or whomever will go and invest that money or lend it out to others who need a mortgage or a car loan or anything like that in an effort to make money. Again, your account will always show that the money's there, so you can in theory cash it out whenever. And if it's FDIC insured, which most reputable banks and everything are, that means your first $250,000 is guaranteed no matter what. Everything short of the US government actually crumbling, you're guaranteed $500,000 of your money is saved. So if you only have 10K to your name, that's excellent. If you have $10 million to your name, you're probably not watching this video, let's be honest. So the point with a high yield savings account is that they offer you, the end consumer who lends them some money by putting it in savings, they offer you a higher percentage yield every year, which breaks down to every month in a little bit more of an interest payment. So instead of making 0.01%, you can have an account like Marcus where you're making 3.75% per year. So let's go back to our $10,000 analysis. If you have $10,000 making 3.75% interest per year, this is what that looks like.
But wait, there's more.
Because this math is actually incorrect. You see, in these types of accounts, the percentage they're showing you is per year, but they pay you at the end of every single month. You get money just for keeping your money there, not doing anything with it. Cha-ching. And every month, now you add that balance to the initial balance. So now this $10,000 is gonna make roughly $31.25 per month. And then that $31.25 that got added will also contribute to the 3.75%. So then that makes money, and now you actually see that $10,000 you had at the start of the year, if you left it there all year, would be worth $10,381.51. Now, if we go back and look at our original reference, that number came out to be $10,375, albeit that's not a huge difference. Again, we're thinking long term, we're thinking scale, we're thinking 30 years into the future. Oh, well, now that starts to add up. Because now let's look and say you had $100,000 in your banking account, go you, sitting making 3.75% for the year. This is how much money that $100,000 would be worth at the end of the year. Now, before some of you go to the comments, you might be saying, yeah, but inflation's like 6 to 8%. So this being 3.75 doesn't even break even on that. And you're absolutely right. Unfortunately, you are absolutely right. However, what you're saving here and with this high percentage yield, you're actually mitigating and negating some of your losses due to inflation that other people who are either not moving their money over or out there just buying shit they don't need are not doing. So they will feel twice the amount of pain of inflation because their money that they have or spent will be worth less in buying power than it will be the next coming year. But you've negated at least half of that because of having an account like this, which gets you higher percentage yield. Again, this is not gonna be your major investing strategy, but the foundational bedrock. So if all hell breaks loose, you still have this. And that is what good financial planning is. Having foundation and security so you can go and test and invest in a few different things, but always know you got this bed of money, this bed of cash, making money in the back, doing just fine. Moving on. Now, the companies and banks that typically have these kind of higher yield percentages are gonna be online banks, which have way less overhead, way less people to pay, very little or no physical footprint to go pay rent on. That's why they can offer you better returns because they're making more money and spending less of it. Or credit unions, which legally cannot do as many things with money as a bank can. So they typically have slightly higher yields because of that. And this isn't true all the time, but it is for the markets account. No minimum balance. That means if you have $5, $500, $5,000, anywhere in between or beneath, you can open an account. There is no minimum balance and no fees. It's not like, oh, there's a hidden fee if you have nothing. If you don't believe me, go check the sources. I have 2 in the description. Both of them claim that, and I've also read the Marcus terms of services. Not all of it, but the part about the fees. I read that because I don't like hidden fees, and I don't want to tell you about something that has hidden fees because then I feel bad because I'm trying to make you money and fees take your money away. Yeah, fees. To wrap it up, high yield savings accounts have higher interest rates every year. They are FDIC insured up to $250,000, and they typically have no fees and no minimum balance. That is excellent. Again, this is not my end-all be-all investment strategy, but it is a fundamental foundation of my strategy, and personally, I think it should be one of yours as well. That's why I made this video to share about it. So if you want to learn more about the Marcus account by Goldman Sachs, you can check it out below. I have my referral link down there, as well as, again, the sources for this video. Transparently, the referral link does give me and you an extra 1% interest for I think like 3 months, which ain't nothing. And it doesn't compound on my end. So it's not like if 1 or 100 of you do that, I'm now making 100%, no, it's all the same to me. It's here to help you guys. You can't blame me for wanting 1%, all right? All right, I told you I'm gonna be transparent on this channel, always, all right? Cool. So be sure to go tell your group chat and put in your Hinge bio that you know all about high yield savings accounts and that you are using your money to make some money. Because remember guys, if you have money problems and nothing changes, nothing will change. Invest in yourself, invest in your wealth, invest in your health. Let's go make some fucking money. Have a good one. That's definitely becoming a thing. That's becoming a thing.